So our April read on the producer price index hitting the wires, down 1.3 on headline. That is almost 3 times the expectations. And, of course, it's a record. This series was changed, revamped, altered in 2009. Nothing has been anywhere near that. The lowest we've seen is down 0.6. And if we strip out food and energy, known as core, it is down 0.3. If we look at X food and energy and trade, it is down 0.9. Let's look at final demand. So a headline year-over-year number is down 1.2 versus the month-over-month, of course, which was down 1.3. And if you strip out on the year-over-year food and energy, it's up 0.6, which is really the only up number here. Think about that. So PPI, year-over-year ex food and energy, up 0.6. Why? Because you're going all the way back, looking a year back. And if you include trade on the ex-food, energy, and trade, it is down 0.3. So nothing really shocking with these data points. And, of course, CPI is probably a little bit more relevant to many traders, closer on the pipeline to the ultimate end user. But this is still very important data, especially for the Federal Reserve. Don't think they need to worry about inflation anytime soon. Jay Powell coming up, of course, at top of the hour, and everybody wants to know how he's going to deal with negative rates. Is he going to say it, emphatically? Is he going to say it behind closed doors, the same as he tells us? These are very important things we all want to hear. Andrew, back to you.
Hey, thanks, Rick. Appreciate it. We'll get over now to Steve Liesman, who joins us with a little more as well. Steve.
Thanks, Andrew. The big decline in energy showing up in a big way in this report. And what you have is you have massive deflationary forces right now coming from a lack of demand all around the world, especially in energy, but also in other products. What I have not seen, and I think is interesting here, in any of the detail, either the CPI report just a little bit yesterday or the PPI report, is any of the inflationary forces that would come from supply shortages. We just don't seem to have that, or that's not showing up. You have to imagine at least some things are in short supply that are needed, and you're not seeing any of the offset at all. So you have these massive declines, minus 1.3% on the headline, and X energy minus 0.3. Maybe that's part of it, is that some of it's being pushed up. And when I look down the pipeline here at different parts of it, I don't see much inflationary pressure either. So that's going to be the story that gives the Fed some leeway to possibly to keep the foot on the accelerator. But also it creates an issue, which is that does the Fed need to start taking action now to avoid out and outright deflation in the economy?